What's up, everybody, and welcome back to the channel. Here we are today, December 9th, 2021. Definitely not where people even just a few weeks ago or a month ago thought we would be. You know, if you're new to the crypto space, then you'll know that, or maybe you know that it typically, you know, up until this point, cycles every 4 years follow the Bitcoin cycle. And, you know, 2013, 2017, there was a big blow off top. Well, why hasn't that happened yet? So I wanted to take some time to really just discuss a couple of things we've talked about in other videos, but there's been more developments, and it's important to know. It's important to really understand that crypto is not just in a bubble, so to speak. Well, some would argue that crypto is, but it's an ongoing and growing asset class. But overall, right now, there are things that are, you know, really coming into play with crypto. So if you want to pay attention to the long-term markets, it's definitely, what I mean by that is that crypto, there are other outside forces that play into where markets are going. So I look at really right now what's happening, and you see Bitcoin prices with the market still following Bitcoin mainly. We've not seen this big blow off top that everyone keeps talking about, and that honestly everyone thought would happen at this point. So everyone's still kind of like, what is going on? What's going on with Bitcoin? So you can see right here, just, you know, the overall market cap of Bitcoin is just, it's under $1 trillion now. You know, right around 900. You see between 908 and 916 billion. So just overall, since the market's still following that, you know, people are scared right now, and that's mainly to do with the Evergrande fiasco going on with them defaulting. We'll talk more about that. Also, inflation's running hot. There's some new inflation update data coming out tomorrow. Actually, tomorrow morning, we'll definitely be watching that, and we'll keep everyone updated on what that means. But inflation's going through the roof, and also the Fed, what are they doing with not only the bond tapering but also interest rates overall, what their, you know, bank-to-bank lending rate would be. So just interest rates across the board could be going up. So all of that is definitely playing into it. You can see right here, though, just to put it in perspective, right now people are short term. They're a little worried about things. People are scared. They're like, what's going down, what's happening? And right now these red candles going down definitely do look scary. But I look at things maybe not day to day, but just macro level, we just see the overall market cap of not even Bitcoin, but just overall crypto. We might be at, you know, 2.2 trillion right now, but you know, this exact date, just 1 year ago, if we're at 2.2 trillion right now, last year, December 6, 2020, we were right at $536 billion, and that was for all of crypto. So that just puts it in perspective. Even just 1 year can change. 1 year can change, and you know, we might even go down lower on Bitcoin right now. Let's just say, let's zoom in here, and let's just say, you know, we're hovering around this, you know, in the 40,000 range. Well, what's to say that some analysts say we could even get down into, you know, $42,000, $43,000 range. So if we do go to that level, where are, you know, what's going to happen to the rest of the market? People are probably going to be scared. So, you know, you can see right here, let's dig into the article. Evergrande has defaulted on its debt, Fitch Ratings says, and that's as of today. You can see Evergrande, the embattled Chinese property developer, has defaulted on its debt, according to Fitch Ratings. The credit ratings agency on Thursday downgraded the company and its subsidiaries to restricted default. That is definitely not good, meaning that the firm has failed to meet its financial obligations. Fitch said the downgrade reflects the company's inability to pay interest due earlier this week on $2 denominated bonds. The payments were due a month ago, and grace periods elapsed Monday. So this is like billions of dollars, $300 billion in total liabilities. You see right here. Fitch noted that Evergrande made no announcement about the payments, nor did it respond to inquiries from the ratings agency. We're therefore assuming they were not paid, Fitch said. Evergrande has about $300 billion in total liabilities, and analysts have worried for months about whether a default could trigger a wider crisis in China's property market. So if you don't know, the long and short of it, Evergrande, they're the largest real estate conglomerate in China. Just huge. They're worth a lot. They have a lot of real estate holdings. And this potentially, you see right here, the U.S. Federal Reserve warned last month that trouble in Chinese real estate could damage the global economy. That's definitely being still, with that being an uncertainty. I know we talked about that even just a couple of days ago. With this being an uncertainty for the foreseeable future, it's definitely going to have a play on crypto and on the overall market in general. How this exactly plays out, who knows? Because literally today was the day that they've defaulted. So we'll see. It said Evergrande did not immediately respond to a request from CNN Business for comment. However, the companies warned this may be coming. In a stock exchange finalized Friday, it said it might not have enough funds to meet its financial obligations. So that's just, you can see, definitely makes people scared, makes people uneasy. And, you know, the way that these big giant corporations and conglomerates work is that, you know, if you're money at that high of levels, it's from other countries too. So China, there could be American investors, European, that are invested in Chinese companies, in this case Evergrande. So the money is more, I guess what I'm trying to say is it's global, in that when you have that much money, it can have global ramifications. All right, enough of saying the word global. Let's talk about inflation too, because this is, you can see right here, to Bloomberg.com article, inflation near 40-year high shocks Americans. Well, no duh, shocking us. That's just crazy right here. You say the U.S. is poised to enter the year 3 of the pandemic with both a booming economy and a still mutating virus, but for Washington and Wall Street, one COVID aftershock is starting to eclipse almost everything else. You see right here, inflation, where we are right now, as of the end of October, 10/31, we were 6.2%. And that was the consumer price index. So tomorrow, the data for all of November comes out. So this will tell us, where's inflation? So if it comes out lower, than 6.2, 6.3, if it at least stays the same, maybe less, that's going to be good news for the markets. But if it comes out tomorrow that it's 6.4, 6.5, 7% or higher, that would be really, that would not be good. And I feel like we're going to have more of a sell-off in Bitcoin. So, my chart gets a little slow here when I got the screen recorder going. But you can see, I think that, really depending on where inflation, what CPI has, I mean, we could even see Bitcoin come down here and retest some of the support that we had back in late September in the 44,000 range. So we can really see, just depending on where that comes out, it'll be very interesting to see. Higher prices helped deliver a banner year for U.S. business, which has posted its fattest profit margins since the 1950s. But for Joe Biden's administration, Jerome Powell's Federal Reserve, which didn't see it coming, the sudden return of inflation, largely dormant for decades before 2021, is looking increasingly traumatic. So they're saying it's likely to drive some big changes in the coming year as the Fed pivots toward raising interest rates and the president heads into midterm elections with slumping approval ratings. So we'll see. We'll see what the report comes out tomorrow morning. I will dive into it. Maybe I'll make a video on it tomorrow. It's super exciting to discuss just inflation, I know, but it's definitely important to know about because, like I said, what we're paying for things just across the board. You see this article from Yahoo Finance. Citigroup CEO Jane Fraser forecasts a brutal winter for markets. So what we're paying across the board for just everything. You see inflation, I got this really cool chart here from the Bureau of Labor Statistics, where inflation is and where it isn't. 12-month change in the price of mainly gasoline has gone up 49.6%. Rental cars 39.1%. Used vehicles 26.4%, hotels 22.4%, transportation 18.7%, furniture 12%, new vehicles 9.8%. That's interesting. Used vehicles is 26.4% and new is 9.8%. Appliances 6.6%. You see overall inflation 6.2% as of the end of October. Food at home 5.4%, and it goes down. So this is not when it's in the single digits. I guess it isn't too too noticeable. I was going to say it's not too bad, but it's not as noticeable. But you see right here, the U.S. and Canada each recorded inflation last month, not seen for more than a decade. The U.S. reported 5.4% rise in consumer prices in September, so we know that that's higher now. So that's definitely a major concern still. So once tomorrow's CPI data comes out, it'll be interesting to see exactly where overall inflation will be. So I said that definitely could. We're probably going to see a tumultuous market. We're probably going to see crypto in particular discontinue just trading sideways where it is, or even potentially going down. I'm more concerned about not the day-to-day price so much as I am just looking at overall where are we going to be with the CPI data tomorrow, and also next week. We'll talk about the Fed here. We'll talk about how much they're going to be talking about how much they're going to be tapering, and whether they're going to speed that up, whether they're going to speed it up, or whether they're going to take even longer. So, but the concerning thing, and let's talk about that now. The concerning thing is, can the Federal Reserve taper without causing a tantrum in the market? So that's kind of what the main concern is, that because the Fed has been buying, treasuries and bonds, it's helped stabilize the basically the amount of money and the velocity of money in the market. But the question is, well, with them cutting that off, how is that going to impact the overall economic outlook? So you can see at its November 2021 meeting, the committee announced that it would slow the pace of purchases to $70 billion and $35 billion per month, respectively, and expects to slow the pace further to $60 billion and $30 billion in December. So that's $60 billion in treasuries and $30 billion in mortgage-backed securities, which is a further tapering purchases by $10 billion a month in treasuries and $5 billion a month in mortgage-backed securities. So they're just cutting that off. So the question is, like in this article here, can they do that without the market reacting? So some analysts say that it is already priced into the markets. I would tend to agree. That we've kind of known about this for a while now. So when the Fed meets next week on Tuesday, I believe, they're going to have a couple meetings, but by the 15th of this month, so literally the 15th of December, they're going to decide if they're speeding this up, if they're going to be further tamping down that flow of money, which, inflation is just going. They have to do something. But they're kind of between a rock and a hard place, in that if you stamp the economic growth down too much, it could really stall things out. And so they're really worried about. They'll also are going to be announcing soon when they would be, if they're going to be hiking interest rates, which I believe they will be. That could have, just watching the day-to-day markets for my clients who are doing mortgages. We have to look at where the market is, decide when the best time to lock, because mortgage rates, they fluctuate every single day based on bond prices and treasuries. But overall, we have to see what the Fed's going to do, because that impacts just the overall economic outlook and crypto as well. And maybe not interest rates as much, but it's going to definitely have an impact. So we'll see. We'll see what actually ends up happening. This is kind of interesting here. Will history repeat itself? Right after the COVID crisis, the Federal Reserve purchased a little more than $4 trillion of Treasury and mortgage-backed securities to stabilize financial markets and stimulate the economy. Now, as the economy recovers, the need for those large-scale monthly purchases at the same rate diminishes, but slowing the pace presents challenges. In recovery from the Great Recession, the announcement that the Fed was considering tapering its security purchases sent the market into a taper tantrum, I like that caused a spike in interest rates in Treasury bonds. So they're just worried, well, will history repeat itself? Will there be something similar if they cut that down? That's the thing. There's, let's jump down here to taper talk. The thing is, as the economy showed signs of recovery, the Federal Reserve signaled it would shift toward a gradual reduction in the pace of asset purchases, or tapering. While the contraction in economic activity in the spring of 2020 was extremely rapid, so too was the rebound. Just 1 year after the downturn, real GDP had more than regained its pre-pandemic level. So Where we are today, though, 2013 versus today, why did the seemingly simple and small adjustment to the Fed's asset purchase garner so much attention in financial markets? So to understand this, we got to roll back a few years. You can see here the Fed during the earlier episode had purchased had purchased a similar total amount of treasuries and MBS, mortgage-backed securities, all but spread over a much larger period. As unemployment fell in late 2012 and early 2013, it looked like it might be time to pull back on the stimulus, that assets purchases provided. So then the chairman at the time, Ben Bernanke, had attempted some earlier signals. He announced in 2013 that the Fed would begin tapering at some future date. So that's kind of where we are right now. It's like, well, what happened back then? What was the response to the tapering back then? You can see right here, it's comparing 13 to where we are now. Response to tapering announcements: increase in 10-year Treasury yields since announcement. 2013 has saw that an increase in the Treasury yield, but right now, where we are right now, yields are not going up. They're staying. This curve is staying a lot more. You can see right here, it's not increasing. So yields are stable. It'll be interesting to see how this plays out. It will definitely see that. Ben, the federal chairman here, Jerome Powell, Jerome, he does not have an easy job right now, so he definitely has a very precarious position to be at right now in the whole Fed Reserve as a whole. It'll be very interesting to see. So we'll stay updated on what happens tomorrow, where inflation data is. Won't keep rambling on too much more about that. Last thing I wanted to share too is this very interesting article, because we know that regardless of what happens with inflation, what happens short term right now, we cannot continue to print money without there being some kind of ramification. And so I don't know. I think that the whole game plan of the centralized banks and the whole idea of central bank digital currency in general is control of us. They want control of us. They want to be able to control even more how we're spending our money, energy. So you see right here, this article says exclusive IMF, the International Monetary Fund, in 10 countries. What happened to my article here? And 10 countries simulate cyber attack on global financial systems. So it's like they're pre-programming us to be ready for some type of event. Now, some people would say, well, this is normal for this to happen. It is, but there's usually some kind of high-level global type war games before something happens. You see right here, Jerusalem. Israel on Thursday led a 10-country simulation of a major cyber attack on the global financial system in an attempt to increase cooperation that could help to minimize any potential damage to financial markets and banks. So there was a bunch of countries, they had a 10 simulated war game, as Israel's finance minister called it, and planned over the past year, evolved over 10 days. So there was, let's see what countries were involved. They had the Israeli government officials, they had simulated that such threats are possible in the wake of the many high-profile cyber attacks on large companies, and that the only way to contain any damage is through global cooperation, since current cybersecurity is not always strong enough. And that's true. Participation in the initiative, called Collective Strength, included Treasury officials from Israel, the United States, the United Kingdom, United Arab Emirates, Austria, Switzerland, Germany, Italy, the Netherlands, and Thailand, as well as representatives from the International Monetary Fund, World Bank, and the Bank of International Settlements. So these are all global powers here, all global centralized conglomerates, and they want to continue to have control over us. So what happens with inflation? What happens when we have eventually a debt crisis and we don't have any more road to keep kicking the can down? What's going to happen? Well, there's going to be a liquidity crisis. Something's going to happen. There's going to be a problem. We're going to react. They're going to swoop in with the solution, and I believe that solution is going to be crypto. I feel like crypto is a hedge against inflation. So smart money right now, while the market cap is still only a few trillion, smart money is getting in, not financial advice, but smart money is getting in to deflationary assets like crypto because of all of this craziness going on. So this is why, to wrap up, this is why it's important to stay on top of macroeconomics, right? Because the day-to-day stuff, the day-to-day stuff. Some people get involved in the technicals, and that's awesome. There's really smart people you can follow that do all of that. I'm looking at macro. I'm looking at overall pictures. I'm looking at trends. I'm looking at what are some of the deeper things that are impacting our investments. Because if we're wanting long-term, I'm super bullish on crypto, but short-term, there's some very interesting things. And I think the end goal is some of these large banks, central banks. It's about crypto. It could either be really good in that it's decentralized for everybody, but it also could be abused. It could be misused by centralized power, centralized authorities to have even more control over us. So when we see things like, the UK or the IMF planning games, planning the collapse of some type of cyber attack and collapse of the banking system, that makes you wonder, well, what could solve something like that? They're going to use any kind of little emergency like that to now exert even more control. Just food for thought. Not saying that that's exactly what would happen, just possibilities and options here on the timeline. So hopefully this video getting a little long, 20 minutes, but wanted to condense just a lot of info, a lot of information here that I had to go over. So appreciate you watching along, listening to me go through where things are right now today. Really enjoy making this, enjoy digging into the research. So thank you for all the subscriptions. We've definitely grown hundreds of people here just over the last week, so I'd love all of you watching and just taking time to listen to just some guy here talk about crypto and economics. So try to keep it entertaining and useful. I understand you have a lot going on, so appreciate hit the like button if this was helpful to you. This definitely helps grow the algorithm. I know everyone has to ask for that. Definitely help me out with the likes. If you're still watching, smooch that like button. Just smooch it, to give it some love. Help me out, help me grow to reach more people. And I want to hear from you too. If you have any questions, what did you find interesting about this? More importantly, how are you feeling right now about the market? Let me know in the comments. We'd love to hear from you. And I'll see you in the next video.